Good morning, traders. I'm Greg McKenna. Welcome to Markets Morning. It's the 4th of December, and we get to talk about that first day's price action after the glasnost between I was going to say Russians, but between the Chinese and the Americans with regard to their trade war. It's pretty clear that the narrative is coalescing over the differences between the two sides and people's concerns that this is just a can kicking. It doesn't matter where you read, the press, as I suggested yesterday, or whether you read a lot of Wall Street economists. Have a look at Markets Morning, the written piece. I've had a good discussion about that. That seems to be the way it's coalescing. And interestingly, Larry Kudlow was out there blah, blah, blahing as he does. It's like a wall of noise from Kudlow. Steve Mnuchin actually was the key point, I think. He said that the administration wants to see action. None of this giving us a cuddle and keeping us in endless talks. So I guess that reinforces to traders and to investors that there are still a lot of risk. President Trump tweeted quite positively about it. Kudlow talked quite openly about it. But Robert Lighthizer, the US Trade Representative, naturally was put in, sorry, I'm just going to turn the sound down on this one, was put in as the head of the negotiations, not the president, which is what Steve Mnuchin had suggested earlier in the day. So what do we get from that? We get markets that did pretty well, but off their highs. The S&P off its highs, the Dow off its highs, the Nasdaq off its highs. They did well. The Aussie off its highs. 10-year bonds off their highs and rallying. A flattening in the yield curve. A break of the 10s. A break that suggests a run to 2.8. The 10s and the stocks, so the bonds and the stocks, are at cross purposes. You can't have the 10 years breaking down through Fibonacci support at 297. They're just under that now. And have stocks bouncing. Doesn't make sense. Got to reconcile it. How does it get reconciled? Bonds, I think. Anyway, let's dive straight into the charts. As it stands, US dollar forward back, that trend line in the DXY, all that kind of stuff. What do we got here? This is a very indecisive candle. It's hanging out there on its own. And it'll be interesting to see where we end up this time tomorrow morning. Remembering that Wednesday is closed in the States for the memorial for the 41st President George Bush Sr., who passed away over the weekend. So, up and through 28, 30, 23, on a closed basis, is the key to running on. Otherwise, we're going to end up with a big old wedge, range, I should say, a couple of 100 points. Now, that's reasonable. That doesn't mean the rally's ended. It doesn't mean it's recommencing. We get two types of pauses. We get a price pause and a time pause. A price pause for this rally in terms of the S&P 500 is 2,500. That's a 38.2%. I still have that as a target, which is a long way from 2,800, obviously. But that's where we are right here and right now. That's your level. Just like one swallow doesn't make a summer, one day of reversing from the highs does not mean this rally has ended. But the fact that it couldn't get up and through important resistance is a warning. That's the S&P. Right, in terms of the Dow, somewhat similar story. Look at that hanging there. Got a gap to be filled here. Gary Gap Filler. I'm always of the view that gaps get filled. Similar story. You could draw a line across there. Gap to be filled tomorrow. We'll see there. In terms of the local market, the Australian market, couldn't even get to 5,800. I thought it might have got to 5,800 yesterday. The Bulls, if the Bulls really wanted to roar, given that we saw, sort of 2.5% rallies in the Chinese stocks, if the Bulls really wanted to roar, they could have given it a rip, but they couldn't. And even though we finished on our highs in terms of the physical at 27.71, I think we did come off last night just a little bit. But 2,800 to 5,800. Wish they could just have the same number. 5,800 to 5,810 is resistance for the SPY. So keep an eye on that. In terms of the DAX, a little ugly candle there. A little ugly hanging candle, which could probably come back towards 11.3, 11.350 or thereabouts. 11.7 is still the level to keep your eye on. Unless it can get up and through 11.7, it's not going anywhere. Just quickly on trade, soybeans have come back. Now, that's got to hold. That has to hold. that trend line has to hold. If that trend line does not hold and we go back down, you could easily draw. Why don't we do it? The only reason I'm talking about soybeans, because I know a lot of you aren't going to trade them, this is just an indication of whether or not China is actually coming forward with what they said. This is an indication of what people actually think about the trade. So the fact that that pulled back is sitting on resistance is just something to watch. You don't have to trade soybeans to be able to take a signal from it. Anyway, over to foreign exchange, and the US dollar fought back. It wasn't a bad fight back at all. If you'll just bear with me for a moment, I'll open what I've characterized as the most important chart in foreign exchange at the moment. And what that is the DXY chart. Now, in the written piece over the last few days, sorry, I've got some weird issues with this computer. It's a 32 meg of RAM kind of machine, but gee whiz, it's the slowest runner of any of my my machines. So have a look at this DXY, and what you'll see is that level of support has continued to hold. So while it's reasonable that the dollar index at 97 is still quite strong, it's wedging itself up into, and that's not coming up. Sorry about that. Here we go. It should come up now. There we go. It's wedging itself up into a bit of a resolution. So a break and hold above 97.70 is quite bullish. You talk about 100, 102 in DXY terms, but this trend line is holding, and it held again last night. So that's the key in dollar index terms. Now, I know that I have said that the DXY is made up, but lots of people watch it, so we have to keep talking about it. In terms of euro, if we have a look at on the weeklies, we talked about that yesterday, got head, shoulder, head. While above 111.90 to 112.20, it looks okay. It didn't do much yesterday. It really hasn't gone on with anything. It's in a mild downtrend at the moment, so we'll keep an eye on that. The PMIs out of Europe last night, manufacturing, weren't terrible, but problems with Britain, the US dollar fight back, all that kind of stuff. Now, similar story for dollar yen. Again, on the dailies, not a lot. It's not often that you can look at a weekly chart and have better clarity than you can on a daily chart, but that's the reality at the moment. Look at this compression of the moving averages. That really does speak volumes about where we are. The next step for that compression is going to be the flattening, and that will just speak to a range, and then that will coil. One of my followers, readers, whatever you want to call them, said to me yesterday about the coiling of the markets, and I think that's true, particularly in foreign exchange. There are some great opportunities out there, which if you keep your eye on and are patient and follow a process, you will be able to. One of those opportunities might be sterling. We got down to 127 last night, or thereabouts, depending on your broker, depending on whether you've got your askers, your candles, or your offer, and all those kind of things. So one of the things you'll find is you should never take what I say in terms of the level to your broker and say, hey, you stopped me out above the market or below the market or whatever, because the chart I'm looking at in this case is a bid line. So the offer line, depending on whether you're buying or selling or all those kind of things, makes a difference. So anyway, 127 or thereabouts, according to Reuters, was the low last night. 10 points above the recent low at 126.90. 40 points above the range low at 126.60. Remembering what I said yesterday, if 126.60 goes, we've got 120 something, right? Sorry, 120 big figure something. What's going on? Brexit vote on the 11th, so that's next Tuesday, I think. Theresa May's Attorney General spoke to the House about the advice. Labor's not happy with it. They're going to argue. The DUP has signed on to pop at the government. Doesn't look like May's plan is going to get through the Parliament. So then where are we left? Is this a TARP rerun? That's what people are worried about. I remember the day that, I can't remember whether it was the House or the Senate, voted down the first version of TARP. It happened in our trading time zone in Australia. I was treasurer of Newcastle Permanent at the time. It's about a $10 billion bank, you know, not a big one, but big enough to have a bit of fun when you're the treasurer. And that day is just burned into my mind, and I just remember saying, holy shit, you know, what is going to happen now? And then, of course, we know what happened. My book was set up for it. I was ready for a catastrophe, and we made quite a bit of cash. But is that what British parliamentarians are going to do to themselves and the country, or need, in order to actually get their stuff together? Anyway, who knows? 126.60 breaks and holds. We're looking at a big fall. In terms of the Aussie dollar, we can see here, you know, I'll take that out. You get a clearer picture of it with it out. Now there's a gap here. We closed at 73, sort of 10.15 on Friday. We gapped up yesterday. We've come down. We've got partials for GDP today. We've got the government spending, and we've got the current account, both quarterly numbers. That will feed in. Yesterday's inventories knocked about 0.3 off from expectations, according to Westpac. That puts downward pressure. The Aussie needs the US dollar to weaken to hold these levels. Otherwise, that's going to be... I know we're starting there, so it's not going to be an island reversal, but it doesn't look pretty. It does not look pretty. The Aussie needs to take out yesterday's high to get excited. Otherwise, my sense is we get back to sort of 73.15 or thereabouts, and then GDP's out tomorrow. What's the RBA going to say today, though? Is their rhetoric going to change? Are they going to start talking about housing, consumption, real concerns that a lot of us hold about that? Is the RBA? I sensed a little bit of a turn in Governor Lowe's thinking just recently, but is that going to be reflected in the board statement? It's going to be interesting to see. And it's stupid that Australia's central bank makes a decision the day before GDP. It happens every quarter. And it's time for GDP to be moved forward. A day. Can't be that hard, ABS. I know you're cash-strapped, but it can't be that hard. Anyway, it's a stupid idea. Right. CAD. Right. Broken. Busted. Interesting. Look at dollar Sing, look at dollar Yuan, and they're both busted too. So keep an eye on this. That is a suggestion of significantly lower levels. Now, of course, oil was up 4% last night. 130 or thereabouts. If you just do a Fibbo, which is the correct way to do it, do a Fibbo on that. Say, well, what's a garden variety? Well, first of all, you've got your 23.6, but then you've got your 61.8. So that's 131.38. So it should aim and hold for 131.38. There's one thing, when I ran my scan over the weekend, and I've noticed this over the last couple of weeks, the cross correlations between the major currencies is lowish. As I think I mentioned yesterday, Aussie and Kiwi are strong, but Aussie and Euro and CAD and all that kind of stuff, the correlations are relatively low right now. So these things can march to the beat of their own drum. Kiwi looks very much like the Aussie. I'll take that out again. Not as bad because it had an up day, whereas the Aussie had a down day. Kiwi does look like it wants to go to 70, but you have to wait and see what it does. For me, as I say to you, my least good currency on the planet is the Kiwi. So I'll just leave you with that chart to have a look at. Now, dollar yuan, just quickly, breaking lower. Keep an eye on that. The Chinese tried to signal yesterday with the fix at 694, I think it was, that they didn't want dollar yuan to go lower, but it is lower. Dollar Sing has broken lower as well. The only major EM currencies that didn't benefit were the Turkish lira and, I'm having a mental blank, the Indian rupee. That didn't benefit the Philippine peso lost some ground too. But the Indian rupee and the Turkish lira didn't win. Everything else made gains. So there's your dichotomy. That's the trade war glasnost is good for EM. So keep an eye on the Sing dollar and where it goes. As you know, that's my bellwether. Now we better get our skates on. We'll do some commodities. Gold got briefly up above 1233. And I've taken that off now. I've just got a wedge. If it gets up and through 1238 or thereabouts, I think that's 1240 something. 1243. If it gets up and through 1243, then it can have a good run. Got to get up and through there. In Fibbo terms, it's a hold above 1238, but we'll see. So you can see what we've got there. We're in a wedge, and either side of that pattern, which is actually bullish if it breaks to the top side, is worth doing. In terms of the silver price. I'm just going to rough this up because I can't see from back here. So we just put thereabouts. I'll bring that down. Something like that. Right, so that's your range for silver. Off its highs, but still with a 1.5% gain last night. Copper, this is the big one, folks. That's a black candle. That's a down day. Obviously, because we gapped higher. But $2.84, 2847 was the high, Reuters, on the futures. And then where are we now? We're back at 278, 279. Futures are saying, HSC1 futures are saying 277.9. That's a big turnaround. Unless or until copper really gets a move on, then that makes it hard for the Aussie. So copper and soybeans are kind of a suggestion that, maybe. But we'll have to wait and see. And remember what Steve Mnuchin said. I'm going to get the skates on because otherwise this is taking too long. Right. You can say now that the base is in. We now have a tradable low, a dangerous tradable low, because this is the first signal to buy in terms of the MACD. So the moving averages are coming together. That's the first tick. Where's the stochastic? Is it below 30? Just. Yes. Right. Got the signal. Stochastic below 30. Where are we going? Oops, we've already run into the 15 moving average, right? Where can we head to? We can head to 55, 50 to 88, which if you recall is an important zone. And if this is just going to be a garden variety rally, it's about 59 to 60 bucks is where you would expect it to go for WTI. Qatar has just quit OPEC, said it's going to focus on LNG, but that shows a fracturing, I think, of the smaller nations of OPEC. Naturally, Qataris are getting belted by the Saudis. They're getting surrounded. They're cut off, all the kind of awful things the Saudis are doing to the Qataris. I don't know much about the internecine kind of peninsula battle that's going on, but they've certainly been targeted by the Saudis. So it could be a political dummy spit, although the Qataris have said it's not. But we'll have to keep an eye on that. At the moment, it's probably in everybody's best interest to hang around with the Saudis, but production numbers, which I forgot to put in Markets Morning, the written piece, production numbers are quite high for Saudi Arabia. So will they cut? Maybe. Will a deal be done? The Iranians are trying to say no, but if it is, that's where you're going to rally, and the signal's there, tradable low, position size accordingly. In terms of Brent, similar kind of story. It could pull back a little bit, but exactly the same kind of thing. Second day, so the signal was actually yesterday, believe it or not. So where could we run to? 64.5 initially, and then 68 to 69 as your 38.2%. Bitcoin up and down. Looks like it's heading lower. It's got to hold that 3,400 to 3,500. And I think that's it. Right, okay, right. What have we got? Not much out today. We've got Australia's the focus today. We've got EU PPI tonight, but today in Australia we've got the RBA, we've got the quarterly numbers for current account and also for government spending. They're going to be key for the battler. If they're weak, Aussie is going to go lower. But, it's still going to be supported while the US dollar is under pressure. So the US dollar has to break and hold 97.70. The euro's got to go down through 112. Those kind of things for the Aussie to get materially hammered unless we have a really weak data print tomorrow. But we'll talk about that tomorrow. I'll be back tomorrow. Have a great day's trade. Bye for now.